Is it just you and I right now?
Not a lot of people show up to these, which is a shame because I'm always here ready to tackle whatever, like a project or answer questions or just go over anything. If you got something for me, that'd be great. If not, we can just build something.
I can show you what I have. How do I share my screen?
There's an arrow and a square in the bottom.
Yeah, we can work with this one. There we go. Are you able to see that?
Yes.
So this is VP on a 1 week, as you can see over here. And then over here, I have the same thing on an 8-hour thing. I was just able to analyze this high over here because I think that's where it's probably headed. But anyway, here's what I wanted to show you. Besides price is fractal. Right. Let me jump down to the 4-hour. I think that might better be able to show this thing. Okay, so we got this. No, so what I usually do with this is, so when the character changes of the market, I take the last leg, and the last leg is this one right here.
Is that based on a pivot? How do you determine?
Yeah, string point.
Yeah.
And then I go to 2.5 of that leg, and that's where usually the market will go up to at the very least, right? So see, as you can see, 2.5 where it went up to. And then, of course, it comes down and continues upward. This is your classic XM, right? Which is your market maker, either buy model or, so that's why the X, so MMXM, right? I don't know if you had the opportunity to.
No, I haven't.
So it's a concept. And it works like a charm. And the market is continuously in XM, one way or the other. And it's fractal. So if you go down to the 1 hour also, you'll be able to see the same thing. If you go down to the 1 minute also, you'll be able to see the same thing, right? So this XM is playing out fractally all along, all the way through. All of these things are XM at some level. Right. Now, here's the interesting thing. This I haven't learned from ICT, but it's my own observation. Let me get rid of this. That's one thing I wanted to show you. The other thing I wanted to show you is this. When are we expecting the market to reverse? If you look at the previous swing, right, and if you look at the highest high there, so we've got this highest high, but this highest high has been claimed right here. We have this high here, which has also been claimed. So all the highs that have been claimed are not the ones that we need to look at. This high here has not been claimed. This low, it does not quite meet this high. So therefore, this is your next high that has to be claimed. Now, that's all well and good, but if you look at this candle, is huge, right? It's a huge candle right here. Where over here will it claim it? That is the key, and that's what I've figured out.
Claim, you mean like touching that same price area?
Yeah, exactly. It needs to come down here, but how far into there will it go, right? So now you see this candle over here?
Yep.
So this high meet this upswing here. And this candle over here, it overlaps this upswing. And this here is where it ends here, marked out, right? So this candle ends over there, right? So it ends at 26, right? This close and open, right? I call this open close just because it's easier to say, but it's really always close and open. Okay, so this open close here, this close is at 26.12. Price will normally bounce off at open closes if it has the opportunity to do, or very close to that. So this close is at 20. This low that overlaps this upswing over here, okay, is at 26. Price will generally come down over the overlap and either hit the overlap exactly, so 10, or it'll go 1 pip or a couple of pips under that. Now, this open close being that it's at 26, we know, when I say we know or for sure, it just means the probability is high. Okay, so just know that.
Sure.
So between 26.12 and 26.14 is where the price will likely go. So that leaves just 26.13. Okay.
Yeah.
So now let's look at where price actually came down to. Okay. This is where price came down. Okay. This low here is T. I don't know if you can see it or not.
Yeah, I can see it.
There you go.
Yeah.
And so I knew that price would come down over there. I waited for it to come down over there. I waited for it to reject that level as I expected it would do, right? And then it came up here. And then now, here's the other interesting thing. You'll be like, if you knew it was coming down there, why didn't you just buy there? And my answer is because it's all probabilities, right? I just want to make sure, I want confirmation.
Right.
So when price now goes up like this, right, and then I see it being wicked over, right, over this high, it wicks it over. Now I have confirmation that it is likely that price will go higher. We've rejected this level. We've wicked over a previous high, okay, more than one high. Therefore, it will now likely go higher. But now we have this over here. So where is price going to go up from, right? So price could have gone up from here, or it comes down into this order block, because this order block has not been completely clean. Now, in order for me to explain that, let me explain. This is an order block.
Yeah, it looks like a fair value gap, right?
I'm not much into fair value gaps.
That's all I know.
Yeah, but so here's an order, and not to say that don't work or anything. I don't know enough about it. But my observation here says that this order block has not been 100% consumed. Now, what does that mean? We know price came down over here, right? Price came down all the way up to here, right? And then went up. So anybody else would say this order block is now consumed, but it is likely that it has not been completely consumed. We also know this, that when the trend changes, the market will generally turtle soup the low before it goes up, which means that it wicks it, right? If it's going to wick it and wick this low, where is it going to wick it? Now, here's the interesting thing. You see this bar over here, low is 26.16. What is this low? 26.16.
Okay.
So price will let you know in advance where it plans to go. Now, this just so happens that it's perfect. 13, 13, 16, 16. It's not always so perfect, right? It'll be one pip off, couple pips off, but in general, that's what it'll do. You see this bar over here on the right of the OB, its low is 26.26. Now, I know through experience that price, when it consumes this OB, will either at or below this low here. So we have the opening of the inside order block, right? And then we have the closing of the one previous, and it's that price came down to and then moved up. And of course, it came down a little bit more and moved up, right? So this is not exact. And this is a faked turtle soup. So when price comes up here and then comes down, I know that now it turtle soup this order block, right? Or this low. And it needs to come to this order block in order to turtle soup this low, which means it needs to come down to 26.16 or thereof. So that's where I bought it. 26.18.
Okay.
So what I'm trying to say is that the price action is just amazing. It's completely amazing. And these are the kinds of things that I want to be able to program into there. And maybe not exactly that, but just some little range saying that, hey, from here to here, buy. Where it is, right?
Of course.
Now the key will be, you'll be like, what's the big deal? Either you buy this whole thing over here, okay, either you buy anywhere in here and you're good because prices are going to go up anyway. But my contention is this, that yes, you can buy here and your stop loss will be somewhere here. But if you can buy here and your stop loss is somewhere here, now imagine your risk to reward.
Yeah, it's a big difference, especially if you're on leverage.
And I can go on and show you more things like this that'll blow your mind. Okay, but these are that I want to program it.
Okay, let's do that. So what would be the first thing you would need to program this? Because it seems like there's a lot of steps to it. So it seems like you're using the pivot point levels first to determine the highs and the lows. Wherever you got that line from 126.14, is that where we would need to start? Like where would we need to start to program this?
So the first thing we need to do is to, at least what I'm planning to do, okay, is to determine I just lost my train of thought. Yeah, the market structure, right? As you can see, we came up over here, we've been heading up. We came up here, right? This is where we break structure, right? Then we go down, and then now again we break structure and we're going up. That's the first thing we need to do, is to figure out that the market has changed character. Once we do that, then we can look at, okay, now we are in and up over here, right? We know that the market will head down at some point, obviously, and we'll have an MMX and then another MX. So where is that MMX going to occur? So we also also know now that it's have been consumed like this. If you have just one down candle here and then price continues, that's not called consumed. You need to have a more than one candle that goes down. That's called consumed. So if this high is consumed, right, we have a liquidity over here. What's the next place? So we know price will come down under these levels and under this one here too. So where's it going to go? What's the next high? This is the next high. If this is the next high that we are expecting price to bounce off of, where will it bounce off from? It's a shitload of work, I know, Paul.
Yeah, I'm trying to start with one. If you can get just one piece of the code done, then that should start moving you in the right direction.
Yeah, exactly. So I'm currently working on market structure. And see, that's the reason that I wanted to raise
market structure. We could do higher highs and lower lows, right?
Yes, exactly. And so the reason that I wanted to have those structures in an array and then have an array of those arrays is so that I can then mark out this low over here to this high over here. That's one leg. So when we have an MMX, right, we can anticipate, let's say that we didn't have these highs over here, right? Then we can anticipate that the MMX will be from here down back here.
Sorry, your mouse is lagging a little bit. You said from this bottom over here at around 124
to around
122.
So that these highs were not there, right? If these highs were not there, then when price falls from this high up here, it will come down all the way here.
If the highs aren't there at 126.
If the highs are not there. Yeah, exactly.
But since that high is there, that's where it's going to come down to consume that high.
Exactly, because that high has not been consumed as yet.
I gotcha.
So once the high is consumed, now when price comes down again, it might go up from this high here. Because as I said, the one candle, this is only one candle down, right? This is not consumption. This is just a marker.
Yeah.
So it's saying price will come down here somewhere, right?
That's the next spot.
Yeah.
If it decides to come back.
Yeah. So all of these things we can ascertain given market structure. But first we need to build this thing where we say, okay, fine, this is a low, this is a high. And in here we've had all these legs, right?
Yeah.
That's the first thing. After that, we need to figure out, okay, fine, now that we've had this move up here, what's on the left of it? Are there any highs I need to look at that have not been consumed, right?
Okay.
And that's the reason that I wanted that array in array, because then I can, so one array the arrays of swing highs will give me this information here, say another here. And then that will be combined into one list of arrays so that I can then move back in that list and say, okay, fine, I've got this low to this high. What I got before that? And I can only have that if I have a list of arrays that captured this move here too.
And how is that a single move on its own? I can tell just looking at it that it broke the lower low of that, like it made a lower low.
No, it didn't. See, look at this. You see this low, right?
Yeah, I see that low. And then the one.
Let's see, maybe I'm wrong. But anyway, okay. So 24.72, and then this close here is 75. So it didn't break this low, right? And
what about that candle though? The green candle or the white
this
candle?
one here?
No, the one over just a tad. That low, the wick went down to 124.50 or 120.
Yeah, but it's not. So a break would mean that it has to close below. If it wicks, it's not a break. Those are the rules.
Okay. Yeah, those are different rules than I use.
Yeah, exactly.
I use the wicks. First market structure, I use the wicks. But yeah, if I'm looking at a trend line, then it's got to be a close.
Yeah.
Because it didn't close lower.
We're going up. And this wick here makes a new low. So now, therefore, even this close over here, if it was lower than this wick, won't count as a change of character because of this wick over here, which is lower than this close. Our low shifted from here to here. So now this is the new low that you will need to break in order to have a change of character. And that's being proved by the market going up. So all of this is an upswing. All of this is just a retracement.
So that's first leg is the first upswing. And then you had the two upswings, basically, two impulses.
Yeah, exactly.
Right. And the first impulse is because it made a lower low. The second one you just showed me, I wish I could annotate here on that close.
Here?
Yeah, that one I think.
Okay.
Right? You said that one made a lower low than the first one, and that's how we determine it's the impulse is done.
No, it did not, right? Because this low here and this close is higher than this low. And this bar also wicks lower. So this lower wick now is our price would have to close below that in order for us to say, okay, maybe there's a change of character now.
So price has to close below the wick. I got you.
Yeah, it has to close below the wick. And not just that, you need more than one close below. Okay, if you have a close and price heads back right into the range again, then it could continue upward. You need one close and you need another close below a new leg in order for you to consider this as a change of character.
Okay. There's indicators already out there that show that, like the change of character. I've seen that before.
Yeah, but so they use wicks, like you said.
Okay, so we could just change the wicks to what you want, which, we don't have to recreate the code. We can just modify it.
I want to save all of these swings because then I can look at
Yeah, we'll add that part in once we figure out the change of character, because then that'll be the marker for a new array, and then we can just start storing things in that, and then we'll get that part.
We could, but yeah, sure, we could. For me, it's just easier if I write it on my own because then I understand the code. Otherwise, to read through the code and try and understand the code, it's not always easy for me to understand.
Yeah. Yeah, no, I understand completely.
Yeah.
So I want to point you in the right direction. So I would just go and find someone who made a change of character and then see what you can learn from that and then write your own based on your rules, because everyone always adds a bunch of extra fluff into their indicators. So just strip out the basics, which it should be pretty simple. Then you can add in the array part will be complicated, as you probably already realized.
Yeah, I've got that worked out. So here's what I did. I don't know. I think I might have it in this. Yeah, no, this is where I had it here. ICT library, open ICT library. Okay, here. Are you able to view this? Okay.
Yeah, I can see it.
Okay. So what I realized yesterday, I was just being, and I realized yesterday that this is really. So if you look at this swing point, it has is high and it has bar, which is of course another UDT. So just like that, if you want an array of another array, then you would need to make that other array a UDT, because you need to say what that array is of. So
Exactly.
therefore you need a UDT, right? So by making swing point array into a UDT like this, right? I can now then say that a trading range, right, is made up of a swing point array. Now, how that works out in the code is.
Yeah. So what's a swing point, basically?
Yeah.
A higher high, lower low.
Yes, exactly.
Okay.
So now in the code, what I do, where did it go? Yeah, here. I have a swing point array here,
Yep.
and then I have the trading range array over here. So this trading range array will contain all of these swing point arrays, which means it's an array of arrays. So when I come down here, when I find a swing high, I need to say swing, which is the name of my swing point array, swing.
Mhm.
I need to say swing, a swing. Why a swing? Because a swing is the type definition that I've used in my library, right? When I define it. So therefore, I need to say swing.aswing.push. And then once I'm done with all of those, then I can come over here and I've commented it out, right? So here, then the trading range, again, a range, push, swing. So the whole array.
And then you should make a new swing.
Yeah, and then have a new, I just added this in here to see if it compiles, right?
Okay, gotcha.
Yeah, of course, there's a lot of logic that'll go. When I have a new swing array, then I need to add that in here too. So that's where I am right now. Once I know that this works correctly and as I've anticipated, then I can move ahead and write the rest of the code to fill this information and then go from there.
Nice. It looks good so far.
Yeah.
Yeah, and you got the markings for the swing points too.
Yeah, but that's not based on anything value. In the sense, in an upswing, you want to mark only the buys. So here the markings that I have are, I think, based on where the RSI is. If it's above 50, then you mark it down the sells, and then if it's under 50, you mark the buys, which is not the way to go. But I was just experimenting with it. So
Yeah.
once I had the structure down, then these would make a lot of sense, because then I can say, as long as we are in an upswing, keep marking the buys.
So what you would do is you would take your swing point high and your swing point low, and then you could have almost like a zigzag indicator.
Yeah.
And then from there, you would take those levels and then you could draw a line across. And because I'm trying to figure out all the information that you would put in those swing points, because they are just points, right?
I have the candle information as of right now, and that's yours. The
Okay.
Yes,
But it's just for that current bar, or is it for all the bars?
it's for just the swing high or the swing low. Yeah.
Okay.
But from there, then that's where the additional code comes in, right? So then from there, I need to figure out that if price were to come there, for example, out here, right? Another price action gem is this one, where if in this case, it's not really an order block, but say if this were an order, right? And if this low here is lower than this low over here, then price will come to this low and go up. Or if it goes below, and if it has no other obstructions over here, it'll go right through it. Over here, we see this line over here. Once price comes to this order block over here.
So what I'm trying to understand is you have these swing points, and how are you going to identify those levels with just the particular points? Like, you need to store the surrounding information of the bars in the area.
Yes, absolutely. So I haven't worked it out yet. And so I'd add a few more UDTs in swing point, or change swing point type and encapsulate that into some other UDT or whatever. I don't know yet.
Okay. You could track within that swing point, you could track that low and then mark it in that UDT. So whatever candle you set it for order block, so figure out a way to identify the order blocks and then just attach it to that swing point. And you go,
Yeah.
it was at this time, this price, and then you just store it in that swing point. So then you know between these two swing points, there's this order block, and then you can check if it's been consumed or not, or whatever you need to check.
Yes, yes.
I'm
yes.
just trying to think, because when you go ahead and you start to get into what you're trying to do, those tiny details really start to bite you in the ass, because you might have to rewrite your entire algorithm, and then it gets complicated. Apart from running into stupid memory issues too, as well, and other things.
Yeah, I know. I know. Yeah, and that might very well be the case, where I might just have to write the thing from scratch again, because it's all screwed up and that might occur. But at the end of the day, I think it may be a worthwhile exercise, just because I don't have any time in the day to watch the market. And so therefore, it's hard for me to trade. And this way, if I can be forewarned, saying, hey, that a reversal is likely, or its price is coming close to this level, so you might want to have a look, et cetera, that might help me. And then eventually from there, I hope to go to automation, where it automatically places the trades for me. But that's like way down the line, once I've worked out all of these things. And it's not like, yeah.
But yeah, just automating a few of those things just so you can get an alert,
Exactly.
or having an area to watch that you don't forget.
Yeah,
That's huge.
exactly. And then when you add in things like multi-timeframe and all that stuff, it's harrowing.
Oh yeah, absolutely.
Yeah, because I find that in order to gain accuracy, if you move a time frame, you gain more accuracy. As you noticed over here, when I walked you through this here, right? We are on the 4-hour
Yep.
time frame. People usually go down to the 1 minute or the 5 minute. That's not
Yeah.
you can do that. Once you've analyzed it here on a high time frame, then if you want, you can go down to 1 minute and
Yeah,
say,
precisely. Yeah.
yeah, now,
You don't start there.
yeah, exactly.
You're looking to lose some money.
That's your masterclass in price action.
It was good. Thank you for the presentation.
Sure.
I can't trade it, I'll tell you that. I think I need a lot of practice. You got
It needs a lot of practice, and it needs a lot of, you need to watch the markets. You need to see exactly where price move, how it moves, and why, and that. So when I learned this first I was blown away, because I was new to trading entirely and completely new, right? When he showed price coming down really fast, and it's going to go up here, and he places a buy order there, and this thing is moving so fast, but you have a red bar going blah, 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 blah. and then it halts right over where you said it'll halt, and it goes up. I'm like, what the heck? And after I learned those concepts, I used them, and I would lose, even in the next 1 year, I would lose trades. And I'm like, what's going on? Why can't I apply this stuff? But it takes a little bit, and then you get used to it, and then you see things, and then you have your own things outside of ICT also. And then you just know, you just look at a chart and you know exactly what you need to do.
I couldn't agree more.
Yeah.
That's where I'm at.
Yeah, which is okay. It's not a big deal, right? That's how you learn. If you want to learn the ICT way, then that's how to learn, right?
You gotta learn some strict rules and then figure out the rest for yourself.
Yeah, exactly.
There is some discretion to it, or at least like the visual part of translating that into code or into something mechanical can be very complicated.
There's actually not a lot of discretion, right? As long as you understand the rules.
Yeah.
Then it's easy actually. And then like here, we know that we have this low over here where price will likely bounce off of. So we got this low, price rejects it, and so we know that it'll bounce off. We wait for confirmation. Here's the candle going like way up over here. Therefore, we know that this is now an order block over here, right? And then therefore, where is price coming down to? So you see this candle over here. You see this candle over here. The high of this candle is 22.19. What's the low here? Wait, what high of this candle is 22.19. The low of this candle is 21.87. 21.87. Where am I? Oh, on the 1 week. But anyway, so this concept would work better on a lower time frame where this high will be where this would come down to and then go right up. So it's not a lot of discretion. It's just recognizing price action and how it works and how it's that's it.
Yeah. Yes. There's some concepts there that are a little fuzzy for me, but it's like you've got it down pretty well.
Yeah.
And it sounds like you don't need my help as much coding it. Obviously, for some parts you get stuck on, just let me know and I'll help you point you in the right direction.
Yeah, sure. But the reason I was interested in having this conversation with you also was when you said that maybe we can create an indicator and sell it. I think that's when the light bulb went off because almost all traders augment their income, right, with other things. What you're doing, right? You have this community where you share your knowledge of PineScript, right? So that's how we augment your income. Then you have other traders who walk people through how to trade, and that's augmenting their income. So I think it might be a good idea if we can augment our income with some indicators and some, who knows.
It'd be really great. Something that I want to do because I can't do it on my own. I barely have time to keep everything together and deliver on all my promises. It takes a lot of time. And then running another business on top of that would be able to do it. That's why I wanted people in this group, especially to do it with, because many hands makes light work. And clearly you're skilled at this. And I know some others are very skilled in PineScript and trading as well. So yeah, I'd be happy to work on something with you. And then we could combine things together. Like I have my strategy that I'm still working on. But for me, it's a swing trading strategy. And it's just so easy to trade without automating the whole thing that it hasn't taken priority.
Yeah.
Although PineScript was never powerful enough to actually fully automate it.
Yeah.
But now I think it is. But still, just two parts of it, I was running into memory issues because it is a multi-time frame. It requires MACD, RSI, Fibonacci's, and counting.
Okay.
So there's a lot to it. And it might just be a battle of just putting more indicators together, which I don't want to do. Obviously, I'd like it all in one indicator or just releasing something that complements the strategy, but the rest of the work needs to be discretionary.
Yeah. The one thing you can do is once I'm through this identify bias, right? Whether the empire is going up or down, right? I can give you that, and then you can add your things. You can layer your things over that in the sense that if the bias is up, you only provide bias signals. If the bias is down, you only provide sell signal, right?
Yeah, so let's...
Yeah, is that what you mean? That's not what I was talking about at all.
No, I'm just talking about for working, if we were to build something, we'd have to figure out how to structure that. Obviously, we can't do it in this one call. I think we only have 5 minutes left. But if that's something that you want to do, and we'll just have to figure it out. So this is what I've been working on, at least in the past couple of weeks, and I was about to publish a video on this.
Okay.
All it is just the MACD and the RSI with multi-time frame and real-time divergence, and it's giving me pretty decent signals. I posted them to the chart, and this is just based off the divergence. And these bigger lines are the higher time frames. So this is the 4-hour. If I go to the 4-hour, you can see that the candles get highlighted, and I'm using it with trend lines. Trend lines are notoriously difficult to automate, but they're simple enough to just draw myself. So I know here, like I had this 4-hour divergence, and then I saw that it broke the trend line. So I'm just sitting out of this. I'm waiting. It could come back up, and then this is bit could come back up and break this. But how am I going to program? I got to program all that stuff in for me to automate my strategy completely. I would have Fibonacci's in there as well, and trend lines, and they would all need to be super accurate for it to work. And for me to publish that as a trading tool that I was confident people could use and trade with and make money off with buy and sell signals. But I don't want to do buy and sell signals. I want to do something that you can use to augment your trading. So for like this, everyone knows that divergence in the RSI, they kind of work, but you're not paying attention to them half the time. I know for a fact I don't even pay attention to them even when I'm trading, but now that it's in my face, it's hard to avoid or hard to miss.
So I'm not really a fan of diagonal trend lines, right? For example, the last one that you have over there, right? Why didn't you draw that trend line from where it is from that?
This one?
Yeah, that one. If you go higher up, at the higher low, no, the one on the right of that, higher, no, the low, right, that low to this, yeah, there you go. Why not there?
You could on a lower time frame. So my trend lines are always going to be the same for the most part. Like I have an objective way of drawing them, and everything for me, if there's an issue, I use the MACD to do it. But I've been doing it so long, I stopped using the MACD. But the way I learned is, let me see, it's hard to. So obviously, I always take a top-down approach, and then here my MACD. Let me put it on so it filters it better. So there has to be like a higher high. But here, yeah, we made a higher high. So then I take 2 swings. So this is like one swing up, made a higher high, and then what you were just talking about, this is a swing here, and then we went down, and then it made a higher high, went down, made a higher high. So I would just take the last 2 swings and then grab the bottoms of them. And then in this specific case right here, where it dipped a little bit lower,
yeah,
I would grab it there.
I see.
I'm not going to go through any wicks.
Okay.
And you can see I already have that line drawn on the weekly. And then I color code my lines as I go through. So the weekly would be yellow, monthly's red, daily's green, 4 hours is like light blue.
Yes. See, I think other than trend lines, market structure would help you more because it's very clear. Oh, shit, I see where I'm pointing, but it's and flag, all that, I think, are like useless, completely useless.
Interesting. Yeah, I've had a lot of good trades based on trend lines, and because they're all built around the same concepts. You call it order blocks, market structure. And
no, and see, my issue with trend lines is that they're so subjective, right? I can draw one and it'll look completely different than what you draw.
But if I taught you how I drew my trend line, then it would be objective.
Yeah, objective for you, but not for anybody else. You see what I'm saying?
So you're saying based on the market, what the market is doing, then the price is going to reflect that. Kind of like a self-fulfilling prophecy. It's if everyone's targeting the same spot, then the price will reflect that.
Yeah. See, now, okay, you've got equal highs, you've got equal lows, right? And price looks like it's heading down right now, right? It probably sweeps those lows, right, and then go right back up.
Yeah, these aren't trend lines. These are just like for the correction here. It's just for me to recognize a pattern.
Okay.
Because yeah, I come traditionally from a wave counting background, so this would be
okay.
Let me get. So this would be you'd have a wave up and then a wave down, another wave up, wave down, and then for me, I know based off of this is like some corrective structure. So we have impulse, correction, impulse, and this is the second correction. It's almost over. I'm thinking that we're going to go up here, but it's also possible, like always, that we'll come down and make a lower low.
Yeah, it depends upon what on the left, right? If you've already gone over a high, yeah, see those equal highs, right? Yeah, you've gone over them, right? So it swept a liquidity over there. You see what I'm saying?
No, not exactly.
So those equal highs on the left, right?
Yeah.
Current price action has gone above them.
Oh, right here.
Higher than that.
Yeah.
It's gone above that. I think, yes, it has. It swept the liquidity up there. So now and while it did that, it built a liquidity down below. Now it'll sweep that liquidity until you reach that high over there. That high on no on the I go down and down a little bit, and on the left, that high, right? Yeah, either that high or that's a high it'll come to, and then it'll decide what to do. So now if it rejects that high, then it'll continue upward, or it might blurb on that high and then go back to an order block and then continue down. So the up there is probably completed because it's already swept that liquidity. It's all about liquidity. The market will move to sweep liquidity always.
Yeah, if you've ever traded anything in a market where there's not a lot of liquidity and you see yourself start printing candles and moving the market, becomes very clear on what you would do as a player in the game. Like you realize you can't buy everything at once. You need to buy or sell all in one area to enter or exit a position. You need to do it nice and slow. And that's where these patterns start to form, these corrections.
Yeah, but you're in the premium range there, right? So you've got a couple highs over there. So when I say liquidity, I don't mean the number of orders necessarily, but just that you have orders up there, right? So the market hits a high and then you have another high over there, right? That's an equal high over there. Then thereafter it goes down. That means that above those highs, you've got tops and you've got breakout orders and you've got all of these resting.
Yeah,
and
people locked in their positions or people in short positions.
Yeah, the price action will go up above that, sweep that, and then either continue upward or come down. Most likely it'll come down. And that's what we see happening over there. So now if price is rejecting that level after having swept liquidity, then the next thing is where is it coming down to? And remember our earlier conversation about the previous highs? That's where it's coming down to.
So you're saying right here, because I set a limit order earlier.
But have a look at that as if it's an order block and then figure out where it'll go exactly, because bit prices are like crazy, man. We don't want to just buy at that high, right?
No, I'm out right now. I'm waiting for either a move above this structure here to start forming a breakout pattern to go higher as like a bull flag. But my bias is actually it comes down to the downside. And yeah, actually I was targeting, I want to show you, I'm gonna look at my limit order right now. Let me see. Limit buy order. Where did I put it? Right around there. Literally. I put it a little bit higher. I think like I got a buy order down here. But that's a long drop. So it'll be
But so that high, right, probably has an order block in there. I know it has an order block in there. So if you look at that order block and use the rules that I gave you, then you might be able to figure out exactly where it'll go.
Okay, so this is the high you're talking about, right? And then I don't know how to define the order blocks though, because I told you the only thing I know is the FVG.
Okay, screw the FVG. All right, so my guess is the high of that small green candle, it'll hit that at the very least. Yeah. And if it goes any lower than that, which I doubt it will, then it'll come to the open close of that big green candle and the red candle on the right of it. Yeah.
Right here?
Yeah, there you go.
So I guess the hard part for me is how are you determining that? I know you were trying to explain to me earlier, but
I can walk you through that again if you want, just not right now. But
Yeah.
I can walk you through that again if you want. And
I think I'll look up some order blocks on my own and
yeah, but you won't learn how to do. This is my own observation, but I'll be happy to walk you through that. It's be helpful.
Okay. Yeah. Another time for sure.
Yes, absolutely.
I got another call with I think Bart at 3:15. Yeah, so this is really cool. I'm glad you're targeting the same area as me, which is really cool. And I came to that area on a completely different system. I think it was based on this Fibonacci, and I think I also took a retracement of this move.
Okay.
Yeah, the 270. So in this area.
Okay.
It's typically use Fibonacci's. And yeah, I just combine a lot of things together.
Yeah.
And just look for confluences, and that seems to work for me. But
if you draw a fib, that high that we spoke of, the low on the right of that high.
This thing right here?
Yeah, from there all the way up the top of the price action over there, that leg itself. If you draw a fib there and see where the 0.6 level comes in.
0.62.
62 or 618 will do.
618, okay, yeah.
Yeah, so it is also indicating that high over there.
Yeah, okay. That's like a perfect spot then.
Yeah, exactly.
Yeah, because on the 4 hour, there's divergence here. Why is it not showing up? It was there. Oh, because I have this swing on. Yeah, so there's divergence all the way up here, and then we hit the top of this structure, making lower lows or lower highs. Actually, we didn't even make it there. That's how weak that push was. I was expecting it to bounce off this, and it looks like we're not even gonna make it up there. It's a 70K.
You just might even now. No, it doesn't look like you.
Yeah, it looks pretty weak, and it broke under that trend line.
Yeah.
So yeah, that's why I would use trend lines for that type of confirmation here, because I wouldn't want to buy this again, and which is why I got out.
Yeah, I prefer to use market structure rules, the ones that I was explaining earlier to you, because those are more accurate. They work every time, 100% of the time.
Interesting. Yeah, I'm gonna have to learn some more. So it's good sharing knowledge.
Sure, I'll be happy to. I'm not one to hoard information. I like to share and learn from others too.
Same here. All right, this looks like it's about to go down. I gotta jump on another call.
Yeah, I have a 3T too.
Thank you for on today.
Yes, indeed, absolutely.